Welcome to the Rule Classroom Plus. This is Steve Barton, and thank you for tuning in. This is where we are going to take your questions and ask the expert himself, Rick Rule. So I see people are filtering in here, and here is the master of ceremonies himself, Rick. How you doing, sir?
Fine, Steve. I hope, as I recall, you're living in Southern California. I hope you're out of the evacuation zone. I hope your
I
kids
am.
smoky.
Yeah, had to relocate due to power needs. We were talking years ago about putting in solar panels with battery backup and everything, and I should have done that. So after this show, what I'll do is I'll invest in a generator so that I won't have to bogart someone's house again to to make sure I make the live stream.
Well, first things first. Don't be part of an informal barbecue where where you're the meat as opposed to the participant. Anyway,
Yeah.
I'm glad to hear you're safe.
Thank you. Thank you. Yes, doing well. Looking forward to this. We just talked yesterday. That was fun. And we are here again today. Pretty excited about we got the boot camp coming up this Saturday. That's going to be a lot of fun.
Steve, I'm really excited about the boot camp. As you know, having participated in probably all of them, boot camps are very deep dives into single topics around natural resource investing. Many of the people listening to this will have attended boot camps, but for those of you who don't, two things to know. The first is that you tell us what we're going to talk about. And a whole bunch of you wanted to do a new deep dive into gold. So we're going to be talking about gold, a subject near and dear to my heart. We only talk about it if we think we have something to teach. And in this case, I've assembled a great faculty with Albert's help, of course, and we do have something to teach. $99. If for any reason you don't think you got your $99 worth, email me. I'll give you your $99 back. Do not come if you're a tourist. This is 8 hard hours. We're going to give you more information in 8 hours than you could absorb. So you're going to have to play the tapes, which you'll have access to for a year through the Rural Classroom. Uh, if you care about gold, if you want to do the work, if you want to understand why you invest in gold, how you invest in gold, discussion of gold stocks too, not just physical gold, absolutely positively attend. The financial risk is all mine. I'll never give you your 8 hours back, but if you are properly prepared and properly motivated, it'll be an excellent 8 hours. So I look forward to having everybody attend. Once again, gold. The uh, the link is at the bottom of the site. As everybody can see, it is Saturday coming up. I'm really looking forward to doing it. I've been working very hard on my presentation, but I'm going to be competing with some excellent presenters. So I need to be on my best.
Awesome. I look forward to it as well. It's going to be a lot of fun, and I can't wait to participate. Okay, we got a lot of questions coming in here. Do you have any opening thoughts? Anything you want to start with, Rick?
Yeah, there's a couple things I want to talk about. Something potentially important happened this week. Well, many things that were potentially important, but one that caught my particular attention, which was the announcement of the intention by the Prime Minister of Canada to pursue other employment opportunities. I wish him well in his future endeavors, and I'm delighted that he's leaving the endeavor that he's currently involved in. Understanding that I'm American, not Canadian, and Americans have no business lecturing other people about politics, given how absurd we are, I will say that I've been an investor in Canada for 50 years. And in particular, an investor in the Canadian mining and oil and gas sector. And I would say that Mr. Trudeau has become, for some time, a particularly noxious opponent to oil and gas and mining investment in Canada. The impending absence of Mr. Trudeau, I think, really lifts a cap on those businesses. In particular, the Prime Minister believed that there wasn't a business case for Canadian natural gas. Interesting, if you look at the arithmetic, the average gate price for Alberta gas at AECO is about $2 per million British thermal units, BTU. That same gas landed in Shanghai or Tokyo or Rotterdam sells for 13.50 Canadian per million BTU, leaving an $11.50 Canadian arbitrage. Now, you take away the $3 Canadian that it takes to get it from Alberta to Rotterdam, and you're still stuck with operating margins substantially greater than 60%. No business case. The Germans, which is to say the customers thought there was a business case. The Brits had an interest. The French had an interest. The Chinese have an interest. The Japanese have an interest. The Koreans have an interest. It was only Mr. Trudeau who didn't see a business case. With him being gone, my suspicion is, and it won't happen in 2 weeks or 3 weeks. Don't do this if you have a very short-term orientation. But over the next 5 years, I think the fundamental change that will occur in the Canadian oil and gas industry generally, but particularly in the natural gas business, and also for reasons I'll discuss in a minute, the Canadian heavy oil industry has the potential to be very, very, very attractive. We've talked numerous times at the classroom about the fact that the oil and gas sector as a whole on a global basis is cheap. And we've talked about the fact that the Canadian oil and gas sector is cheap compared to the American oil and gas sector and the reasons for it. The principal impediment has announced his intention to pursue other employment opportunities, which oil and gas investors should welcome. In addition to the natural gas opportunity, I want to draw your attention to a different opportunity in the Canadian oil and gas space, which is to say heavy Canadian oil, specifically heavy sour Canadian crude. These crudes are ideal as refinery feedstock for refineries on the Gulf Coast in the US that converted to heavy sour crude so that they could take advantage of cheap Mexican and Venezuelan crude. Because of underinvestments in Mexico and Venezuela by the state-owned oil companies, the supplies of those crudes have fallen so that the US refineries are feedstock short. That feedstock exists in surplus in Canada. But for political reasons, both in Canada and the United States, the necessary transmission infrastructure to move crude from Alberta to the Gulf Coast has been lacking. Uh, if one assumes, and it might be a broad assumption, that the political landscape in Canada is changing with regard to that regulatory regime, and if you take our president-elect at his words, with specific regards to energy infrastructure and particular regard to debottlenecking the Keystone Pipeline, it may be that in addition to seeing very, very, very positive change in conditions for the Canadian natural gas industry, that you will see a positive change in conditions for the Canadian heavy oil industry too. So heads up for people in the classroom. Uh, have a look at your shopping list for Canadian oil and gas companies and prepare to get long. Those of you who are interested in having a Q&A session about oil and gas or an oil and gas boot camp, please in the classroom describe your interest. I have a couple of potential faculty members that we could come on either by way of a deep dive, which is to say a boot camp, or more easily a discussion on one of these Q&A sessions or in some other session, which Albert could arrange around Canadian oil and gas. Happy to do it if you want to see it. No interest in doing it at all if you don't care. Thank you.
Yeah, I think that would be amazing. Is there a backup of, so talking about that arbitrage with natural gas, is there a backup of, what are the facilities called that take the natural gas, turn it into liquefied form so that they can ship it across the seas?
Natural gas liquefaction facilities,
Okay.
and natural gas liquefaction has been part of America's energy policy since the first Trump regime. The regulatory climate du jour didn't change in the Biden administration, but de facto it did change. The Biden administration was at least closetly anti-hydrocarbons, and so there were policy deadlocks that didn't allow the continuation of NGL liquefaction facilities on the U.S. Gulf Coast and Eastern Seaboard. My suspicion is that those are gone. Now, we have more than ample supplies of US based natural gas right now. Natural gas is produced particularly as a byproduct of oil drilling and the shale drilling that takes place, as an example, in the Eagle Ford and the Permian and the Marcellus. The byproduct gas has been sufficient to drive the gas price occasionally below zero. But we're addressing that very rapidly. The cure for low prices, as we've discussed, Steve, is always low prices. And there are literally billions of dollars being spent now in the United States on gas gathering, gas processing, gas storage, soon to be gas liquefaction. In addition to that, companies that utilize natural gas to produce products, say fertilizer or chemical, have been relocating en masse from places like Europe to the US East Coast and Gulf Coast. So my suspicion is that over the 2, 3, 4, 5 year time frame, that more balance returns to the natural gas market. That's substantiated in the market, of course, where the price for U.S.-based natural gas is up in the last 6 months by about 40%.
Yeah, yeah. And are they putting that kind of infrastructure in place in Canada too?
Not at all.
Mm,
There is new infrastructure moving from Alberta to the Pacific coast, from the Western Canadian Sedimentary Basin to British Columbia, where there's stronger local political support, so that that natural gas can access Korean, Chinese, and Japanese markets. That will change offtake of Alberta natural gas all by itself in 2025. But the icing on the cake, of course, would be being able to move Canadian natural gas to the eastern seaboard of Canada, or alternatively, to the U.S. Gulf Coast or the U.S. East Coast. And I think that's coming.
okay, okay. And with Trump coming in, possibly, the Keystone Pipeline getting opened back up, that could get that heavy sour down to the Gulf Coast, and then we make money.
Good for everybody. The refining capacity exists. It would lower the feedstock costs for American refiners, which would ultimately lower gasoline prices for American consumers, while benefiting Canadian producers as well. A win, win, win. The only guys who potentially lose are in Venezuela and Mexico. They have lost because of 20 or 25 years of underinvestment in their domestic oil and gas business.
Okay. Patrick's already given feedback on that. Canadian oil and gas boot camp would be great. Would an offshore boot camp also be possible? So some ideas there. Looks like
Let's do the first one first.
Okay.
Let's do oil and
Yes.
gas before we do offshore.
Start out with the
Let's not
basics.
put the cart in front of the horse.
Okay. Albert's consolidating some of the questions here. Thank you, Albert. He says comments on Paladin Energy.
Paladin, for those who are not familiar with it, is an Australian domiciled uranium now producer and developer that very recently took over Fission, a Canadian would-be uranium developer, which gives them a foothold in the western part of the Athabasca Basin, part of a complex that's very remote from the rest of the production in the Athabasca Basin. And it is probably probably part of a regional play that contains the best undeveloped uranium deposit in the world. I'm attracted to Paladin in the longer term. When I say in the longer term, it's going to take a year and a half or 2 years, I think, for Paladin to take advantage of the structural changes that we've talked about so often in the rural classroom in the uranium market, which is to say the change from spot market pricing to term market pricing. The ability of non-investment grade developers like Paladin to enter into 15 or 20 years supply agreements with investment grade utilities so that the volume and price that the issuer receives for his or her material is contractually bound in, freeing them, if you will, from the tyranny of the spot market. This is important for this discussion because Paladin would not have been able to finance the various projects it has in its pipeline independently, given the fact that it's a non-investment grade credit. Now that they can lock in price and terms, and if they want to lock in a fixed price construction contract with Westinghouse to build the mine, they will be able to develop these projects on their own balance sheet if they choose to. It is not unlikely that Paladin gets taken over, but the fact that they don't have to be taken over means that in the sale process for Paladin going forward, if it takes place, it will truly be an auction. Very attractive set of circumstances for me. Again, don't be looking for Paladin to be an overnight success. Understand that what you are doing is playing the arbitrage between the market's current perception and the real net asset value of Paladin. Reality takes time to play out.
Okay. Got a series here from Walter. Oh, if you guys are watching on YouTube or Twitter or LinkedIn or wherever else you are, we're pulling the questions from the Rural Classroom Plus. So follow the links down in the show notes or in the pinned comment, and that's where you can ask Rick yourself. Walter wants to know, can you speak to your frame of reference with regard to risk and reward?
That's a very long question. We could do a boot camp on that. Um, I think it's interesting that most speculators focus more on reward than risk. And I believe that you have to consider your downside as well as your upside. Speculators need to know that most investment decisions that they make, given the nature of those investments, which is to say speculations, most investment decisions that they make are wrong. And you need to plan for that. You need to understand that when you buy a speculative stock in anticipation of an event that's a possibility as opposed to a probability, that you need to plan for what could go wrong. For me specifically, whenever I make a speculation, I think in my own mind as to what the pathway to progress is, and I chart it. And if the reason to own the stock goes away, I sell the stock. As an example, if we have a surface expression, a mineralized anomaly on surface where we understand something about strength and something about width, but we don't have the third dimension, which is to say we don't have it drilled, it might be that I believe that given the extent and the richness of the surface enrichment, that there is a strong possibility that a drilling program will extend the deposit into the third dimension. I pay attention to the news releases. If the first couple of drill holes, if the first couple of probes of the third dimension don't play out, my reason to own the stock has gone away and I sell the stock. That's one way I do risk management. A different way I do risk management. And by the way, if you look at the instructional materials in the Real classroom, there's, I think, 11 and a half hours of instructional programming that goes over this in much more detail than I'm going to. But another form of risk management is very much human risk management. In speculation, initially at least, the people are probably more important to the project, and you can ameliorate a lot of risk ahead of time by only hanging out with very good people. Don't pay too much attention to the promise of the property until you've paid attention to the people. One of the things I learned from Eric Sprott is the other side of the equation, which is to say the reward equation. When I joined the Sprott organization and the press was asking Eric Sprott about my strengths and weaknesses as an investor, he was very glowing in terms of his description of my strengths. But when he was probed about my weaknesses, he said, "Rick's afraid to be right." When I watch him ask questions of companies, he never asks, how big can this get? How much could this be worth? So it is true that you need to get beyond the credit analyst, Rick Rule, and you need to get to the speculator, Eric Sprott. You also, after considering the risks, have to consider the rewards.
Okay. Well put, sir. Okay. And a ranking on Glencore.
I have Glencore as a 4. There's a lot of political risk around Glencore. People need to understand that. They have been found guilty in 2 different courts of law of bribery. And although I don't have any direct evidence of that, I suggest that there are other incidents at Glencore and other companies that are unreported that'll come to pass. And Glencore operates traditionally in some countries that are regarded as fairly gamey countries. Whether this presents ultimate risk or whether this I should say, existential risk, as opposed to circumstantial risk, is a different circumstance. But the Glencore people have built that company effectively from scratch through acquisition finance. They've done a superb job. I notice as an example in the early part of this decade when the whole industry was running away from the coal business, Glencore looked at the money that could be made in the coal business and they picked up the assets that other people were discarding,
Yeah.
including in particular a coal asset in Colombia where they bought in a 40% interest. They already had a 60% interest in a mine with a 35-year reserve, and they bought it for 1.5 times cash flow. That's the kind of management that you have to bet on. Not for the faint of heart, however.
Yeah. Yeah. Very risky, but could be high reward as well. Conrad wants to know about B2. So, any updates with Molly and B2? What do you see?
I'm a holder of B2. I'm a longtime fan of Clive Johnson. There will be challenges in Mali. For those people who don't know, Mali is a West African country with a very large gold endowment and pretty good gold production. Far and away the most important business in Mali. I think in distant second is cattle or cotton. Uh, there was a coup in Mali not too long ago. The coup leaders rebelled, among other things, against the domination of Mali by the French, but they are looking for a larger share of the nation's resource wealth. And they have done it in some ways which I would suggest are questionable, obviating existing contracts, putting the counterparties of their negotiation in jail, shaking down, I would suggest, both Resolute and now Barrick. Thus far, this process hasn't worked to the disadvantage of B2. Whether or not a different shoe is going to fall, or whether or not B2 has been more compliant in years past, is a different circumstance. If B2 survives the Mali challenge, which I suspect they will, the stock is cheap. The other thing holding B2 back was that they bought a very large deposit in a very remote part of northern Canada, proximal to where Santa Claus is rumored to live. The construction of this, which takes place during the winter only via ice road, has been behind schedule and well over budget. And I would suspect that you won't see a great price rebound in B2 until you see a resolution both of the Northern Canadian construction and the Malian political challenges. I've been involved in B2 for a very long time, and I was a major beneficiary of this company, this management team's prior effort, which is to say, BIMA. And the consequence of that is that I remain a large B2 shareholder. And to the extent that there are other circumstances that cause the stock to go lower, if I consider those circumstances to be unwarranted as a cause of concern, I will be adding to my position.
Okay. Adam is saying, got a lot of comments coming in here. Oil and gas boot camp would be great. I think the timing of oil and gas boot camp could be very timely, much like the uranium boot camp was, especially for Canadian companies, some of which have great dividends. So you paid for being, you get paid for waiting. And we have a question from Tristan. Hi, Rick. What's a good resource for learning about mining geology for non-geologists?
There's a book called Mining Explained, which is published by the Northern Miner Press. That is probably the best primer I know. There is also a book, perhaps inaptly titled, called Introduction to Exploration Geology. It is an introduction to exploration geology, but it assumes some geological knowledge. Uh, Somebody with access to Wikipedia and a dictionary can get through Introduction to Economic Geology, but I will say it's nowhere near as easy as Mining Explained.
Okay. There's also a series on Sprott that was put together by Alex. I can't remember his last
Andy
name.
Jackson. Andy Jackson.
Oh, Andy Jackson. Okay, yeah.
Superb.
And that is really good. I believe you can find it in the Rural Classroom if you hashtag geology. Maybe somebody can sanity check me on that. I believe I posted it in there and it'll come up. It's really good.
That's
Um,
embarrassing that there's a source under my control that I forgot to cite.
All right. Malo wants to know, he says, how about Abra Silver?
I mean, let's get part of it over with. I'm a large ABRA shareholder and have been for some time. This is a deposit in Northwest Argentina that hosts a very nice silver resource that seems to me like it wants to grow. Decent grade, fairly well located, at least well located in the sense that the mineralization is fairly close to surface. It is, however, in a remote part of Salta province. The part of Salta province that it is located in is benefited from the opening of the Lindero gold mine about 40 kilometers away, and has also benefited from a couple $1 billion in investments in lithium deposits. That being said, this deposit is still 40 kilometers away from development. Whether or not the region will ultimately benefit from electrification or gas, or have to operate with generator storage like Lindero does, is a different question. What really attracts me to ABRA, however, is the fact that the exploration is seeming to become predictive, which is to say, when the management team proposes a drill program and they tell you what thesis the drill program has been designed to test, at least for the last two drill programs, the thesis has been accurate. And the drill program has, in fact, successfully tested that thesis. In my experience, about a 40-year experience, knowing something about exploration programs, By the way, I've been trying to do it for 50 years. I've been doing it well for 40 years. What I've learned is that when drilling becomes predictive, you are often on the cusp of greatly increasing the value of the deposit. And I'm hoping that that's where ABRA is.
Okay. Gene wants to know, hey, Rick, if Equinox Gold gets their act together and assuming gold does well, is it possible to imagine a 5 to 10x bagger from here?
That's a function of the gold price. Trying to get a 10 bagger in a company with $1 billion market cap is a bit of a challenge. If you ask me if you could get a triple from here at this gold price, which isn't a bad outcome, I would say if you have 2.5 or 3 years, and if the circumstance the questioner described turns out to be the case, which is to say, if they get their act together, I think it's likely that you will see substantial share price appreciation. The company has been penalized by an ugly balance sheet. They were too aggressive. They were penalized too because in focusing their financial resources on Canadian construction, they deferred sustaining capital investments in the rest of their portfolio. And the consequence of that is that their all-in sustaining costs have risen, even while the gold price has risen. The final challenge, of course, is that they made a bet the company bet in Northern Ontario with their construction. They are now effectively done, which is to say the mine is built, the mine is producing, but it's not yet at nameplate capacity. That takes 3 or 6 months from now. If, as and when they obtain nameplate capacity, and as that deposit begins to generate money as opposed to consume money, if that happens, I think you'll see a real turnaround in the fortunes of Equinox.
Okay. David wants to know, he says, Steve, can you ask Rick about two uranium stocks I'm watching, Lotus and F3, in current rankings?
I don't have a ranking on F3. I'm looking at their recent news releases around drilling with positive implications, but I'm having trouble tying them together. On Lotus, I currently have Lotus at a 5, which is to say, while I like what they've done, the market likes it too. And I wouldn't describe it as being particularly cheap, given where they are on the road to production.
Okay. Han is curious about Devon, Birchcliff, and Pado. What ranking will you give them currently? Will the Trump tariff impact Canadian oil and gas?
I don't think there's going to be a Trump tariff. Somebody needs to remind our president that tariffs are taxes. Uh, it's embarrassing that one would have to remind a president of that, but that's a different circumstance. And by the way, make no mistake, I was no friend of Biden's either. Um, I believe that a Trump presidency will remove many of the de facto oppositions to U.S. oil and gas transmission infrastructure, which could only be good for Devon, Birchcliff, and Pado. This needs to occur. The gas egress from the Western Canadian Basin, sedimentary basin, will improve irrespective of Trudeau and Trump as a consequence of the opening up of infrastructure from the Western Canadian Sedimentary Basin to natural gas liquefaction facilities, which are already in construction and obviously permitted in British Columbia. So 2025 is going to be a better year anyway. But there's a lot of gas to move out of there. And Mr. Trudeau going to politics heaven, and perhaps Mr. Trump being useful in terms of the permitting and the advancement of oil and gas transmission infrastructure in the United States can only be good. The other thing that you need to consider with all of these is simply that markets work. Oil and gas companies are cheap relative to their free cash flows and relative to their utility, respectively. And gas is much cheaper than oil, a temporary aberration. Markets work. And as we talked about earlier in today's show, Literally billions of dollars are being invested monthly in the United States to take advantage of the arbitrage between gas prices and oil prices per million BTU, and also the arbitrage between liquefied natural gas prices in North America and prices for the same commodities in Europe and Asia. And these billions of dollars of investment will eventually close some of the gap, much, much to the advantage of companies like Devon, Equitable, Pado, and Birchcliff.
Okay. That answers Tom's question as well. Got a one here from Philippe. Could you ask Rick his latest ranking on Integra Resources? What is your take of the Florida Canyon acquisition?
Florida Canyon is interesting. It's really a change. They have gone from explorer, developer, to producer. And the question remains whether or not they have the managerial competence at production that they had at exploration and development. The operational synergies are excellent. The company has two projects north of Lovelock, Nevada, famous for being where O.J. Simpson was incarcerated. The Florida Canyon deposit is south of town, which means that as the Florida Canyon deposit plays out, which is to say, as it's mined out, utilizing those same people and that same equipment north of town in their development projects, I think is an attractive uh, prospect. What one needs to consider is a company with a fairly lean management structure and fairly lean overhead will be able to administer uh, uh, an operating gold mine, which is a very different challenge than exploring for gold or constructing and developing a gold mine. That's going to be your near-term risk.
Okay. Walter says, oil and gas boot camp. Yes, please take my money. In fact, I would pay more than once, one for oil, two for gas, three for shale in North America, four for conventional and Middle East, and five for offshore. So I think
Let's
the
start with
hive is
one.
speaking. Classroom's talking. They want oil. Okay, Josh is asking about Kenorland Minerals and the deal that they made on South Uchi project.
Yeah. Again, disclosure of conflict. I have known Zach Flood, the CEO of Kennerland, since he was in high school. I did business with his father. I'm a big fan of his. I'm a large shareholder of Kennerland, so understand that I'm talking my book here. Kennerland is one of the really, truly superb prospect generators out there. And I would suggest that the current market capitalization of Kennerland is accounted for by its royalty on the gold discovery that it made uh, in uh, partnership with its Japanese partner in Ontario. And I suggest that you get the whole rest of the company for free. And I think that the rest of the company is worth more than nothing, in particular South Uchi, the Uchi Greenstone Belt being a well documented gold province in Ontario, which again, the company conceptualized, staked, and is selling to a joint venture partner, is a superb way to enjoy the benefits of exploration without experiencing the risks of exploration. What I mean by that, and people who care about this should refresh their notes from the Prospect Generator Bootcamp, is that Kennerland uses their intellectual capital to develop large conceptual targets, stakes the targets, does the preliminary work, which either confirms or excuses the exploration concept, and then brings in a third party to do the heavy exploration lifting, which is to say, to spend the tens of millions of dollars to ultimately prove the thesis. If at the end of the exercise the project has been unsuccessful, Kennerland's resulting financial losses are fairly small. If, by contrast, the exploration efforts turn out to be successful, as they did at Frotte, the company is left with no capital obligation, but a lovely royalty, which can sell in a matter of hours to the larger royalty and streaming companies like Franco-Nevada or Royal Gold or Wheaton Precious. Having your cake and eating it too, I would suggest.
Okay. Conrad wants to, Rick, could you turn down your speakers just slightly? I think we're getting a little bit of an echo here.
I'll
Uh,
try.
thank you. Conrad is asking, he says, "Hi, Rick. Now that G Mining received the interim environmental permit for Oko West, what do you expect from the feasibility study coming up next quarter?" Oops. Oh, there you
I
go.
I am attracted to Oko West. I was a large Reunion shareholder, not merely a Reunion shareholder. So obviously, I like a lot about the deposit. I don't know how much of the resource that's been drilled off since the transaction will be included in the feasibility study. So I'd rather wait until I have the feasibility and study in hand rather than demonstrate my ignorance ahead of time. Note that I'm a large shareholder of G Mining.
Okay. Um, Petra wants to know your thoughts about Free Gold Ventures.
I'm not a free gold shareholder. I certainly am aware of the upside associated with that deposit, and I'm aware too of its location next to an existing Kinross mine with a very, very, very hungry mill. I note that that deposit, however, is fairly low grade while very large. So the upfront capital cost would be fairly high. Uh, Proponents of the project, including my mentor or one of my mentors, Eric Sprott, are that some of that upfront capital cost will be mitigated by the existing infrastructure in the place owned by Kinross. I am a big fan of grade. There was a joke when I was in university, albeit that was when these deposits were being formed, that tons cost and grade pays. Uh, this company doesn't have too much by way of grade, and it has a lot by way of tons. So the net present value will really be a function of the recovery cost amortizing the upfront capital expense, which will be high and could be challenged as a consequence of grade. Certainly, the permitting regime in Alaska will change notably for the better with the election of Trump.
Okay. And Sylvia says, "Yes, please. Oil and gas boot camp would be great." Sergio wants to know your take on Sonata Energy.
Don't know enough to comment.
Okay. Josh wants to know about Atex Resources.
Atex, I'm a small shareholder of. The market has rewarded them for their discovery, largely, I think, because the company is itself sort of a brainchild of Pierre Lassonde, who's an absolute tier one investor. This is a really, really, really nice discovery, well located in Chile. And it's what was at least a year ago flavor of the month, which is to say a large, developable, decent grade copper porphyry. Whether or not it represents a good speculation at this price relative to other copper discoveries is a different question, and one that I haven't really made up my mind about. It would be a wonderful subject for discussion in the real classroom where people applied the methodologies that we've taught to do their own work.
Okay. All righty. Patrick wants to know about Mag Silver. So, what do you think of Mag's exploration activities at Deer Trail and Larder? Would Mag's capital be better spent by working with Fresnillo to expand the resources at Juanicipio?
Yes, in answer to the question. Mag uh, uh, Mag would be better off, I think, working at Juanicipio or reducing the share count as opposed to continuing these exploration activities where the results have been, I would describe them as, oh, sloppy at best. In particular, at Juanicipio, there is an area that would appear to be the heat generator to the southwest of the existing deposit that really needs to be explored. They haven't paid any attention to it for 10 years or 12 years. I don't know whether that is part of the Fresnillo joint venture or whether or not that's still 100% owned MAG ground. Note, I am a MAG shareholder, although I have sold enough MAG that I more than recovered my initial capital expense. I was involved in MAG from its inception, and I'm very happy as a consequence of that. So, disclosure, yes, I own stock. No, I don't have any financial exposure to it, which is to say, I sold enough of my stock that I paid back my acquisition costs and paid the tax on the capital gain too.
We call that PTPOC, past the point of concern. What are your rankings on Atex and Mag?
I have them both as fives.
Okay, fairly valued. Okay, interested and got more oil and gas. Cool. Paladin, we touched on that one. Um, Microcap explosions regarding Orico. Does that mean anything to you?
No.
Okay. Um, Rick, would you have any information about permitting for Nova Gold, Donlin Gold Mine in Alaska?
I think it got easier, which is different than easy. Donlin is a remote location. Before they worry too much about permitting, they're how to make it economic. It's a very, very large gold deposit. There are some indications that there's some grade somewhere in that great big mess of gold and copper. But I would suggest that permitting isn't the biggest challenge there. The big challenge would be drilling off a deposit that becomes economic, given the extraordinary upfront capital costs that are required to bring it in production. You haven't seen the environmental community swing into opposition of Donlin because the environmental community saw that Pebble was currently economic, and it was more worth their while to fight Pebble than it was Donlin. Donlin had economic challenges in addition to permitting challenges. It's worthy to note too that most of the permitting challenges aren't local, which is to say, uh, by and large, the native communities and native corporations in rural Alaska are broadly supportive of mining because the mining business has done a very good job of sharing the economic benefits. The state government in Alaska has been generally very supportive of mining activities. The fishing community, commercial fishing community, has been less supportive, but the big roadblocks in terms of Alaskan permitting have always been federal. In particular, of course, we saw the Antler copper deposit, where the state and local political structure was solidly behind the mine, and President Biden, by executive action, denied their road permit. I don't suspect that you would have that type of difficulty with President Trump. But as I say, the Donlin challenge at present is economic as opposed to permitting.
Okay. Ingo is asking about NextGen. So, what does Rick think of NextGen Energy? And if he thinks it has a big enough deposit to possibly profit well from uranium boom, if there's a change of view regarding Kazatomprom?
Love hate. I own NextGen. Mercifully, I've owned it for a very long time. I have a negligible base. In fact, I probably have dragged all my capital out of it. It is, I suspect, the best undeveloped uranium deposit in the world. That deposit needs, I think, to be merged with the fission deposit now owned by Paladin. For reference, they're about 350 kilometers west of infrastructure. And the idea that you would build duplicate infrastructure for two deposits within 25 kilometers of each other sounds really stupid. You know, building two airstrips, two gensets, two camps, two water treatment facilities, two forms of access and egress. If you built these deposits as an integrated whole, you probably save $500 million. Whether or not the mining industry is smart enough to do that is, of course, another question. Um, Going back to NextGen, my knock on it has been that the general and administrative charges are too high. The uh, promotional activities include things like the sponsorship of Formula One racing, which I would suggest is of no benefit to the local parties in Saskatchewan or the shareholders of NextGen. I continue to own the stock because this is the best undeveloped uranium deposit in the world. Many people think that NextGen can't develop the deposit because they're not an investment grade issuer and because the upfront capital cost will handily exceed $2 billion. My personal belief is that because NextGen did admittedly an ill considered financing and bought a lot of uranium, that they will be unusually able to take advantage of the term markets because they have the uranium to fulfill the early year obligations already in the treasury, already bought. The consequence of that, I think, is that the financing of the NextGen deposit, should NextGen decide that they want to develop it themselves, is much more achievable than the rest of the industry believes. I continue to believe myself that NextGen will ultimately be named Cameco or Rio Tinto or BHP. This is an absolute tier one deposit. This will be in the lowest cost quartile of uranium deposits in the world, probably in the lowest decile. Um, this will be a generational deposit, which is to say it will produce long after I have disgraced this earth. It will likely be in the best quartile worldwide in terms of return on capital employed. I don't think it will ultimately be built by NextGen. And despite the fact that I'm critical of the company in terms of their general and administrative expenditure, I do need to say that the company has done a very good job de-risking the project, building local consensus with the Métis and the First Nations, building support with the province of Saskatchewan, doing the upfront technical, environmental, pre-construction work. They have done a lot of work behind the scenes de-risking this project. When they get the project sufficiently de-risked, I think it's going to be a game of chicken between various acquirers as to who can't resist owning this deposit.
Okay. All right. Han wants to know about meteoric resources. Are you concerned with the recent decline in share price? What ranking do you give them?
I have Meteoric as a 4, and I'm trying to convince myself to downgrading it to a 3. You will note that my valuation of Meteoric assumes a higher heavy rare earths metals price. I think that Meteoric is the best non-Chinese rare earth project in the world. I think it has strategic value. I also think that new drilling campaigns and new metallurgical work will increase both grade and recovery. And I know that the size is going to increase. There's absolutely zero doubt. I'm attracted by the reduced share price. The reason that I'm flirting with increasing the ranking from 4 to 3 has more to do with the fact that the deposit's getting cheaper, which is true, as opposed merely to deposits getting better, which is also true. I love tier one deposits, must own deposits in commodities that are out of favor. And that describes Meteoric. People asked earlier about 10-bagger potential. I think there are maybe 3 or 4 junior development projects in the world that I see genuine 4 or 5 year 10-bagger potential in, and Meteoric is one. Are there risks? Sure. The Chinese could decline to follow through on their intended embargo with regards to finished and unfinished rare earths, and attempt to flood the rare earth market. That would be one. There could be problems with regards to Brazilian politics. That could be two. The third is that I could be wrong in terms of the company's ability to upgrade both the tonnage and grade of the deposit. I think I see that as the lowest risk. The circumstance I believe that will happen is that heavy rare earths on a global basis, pardon me, the prices of those things will go up to the point where the 4 or 5 best rare earth deposits outside China become economic, which is a strategic goal of the Japanese, the Koreans, the Americans, the Europeans. That at least that part of Brazil stays politically stable for mining. And my least risk, which is to say that with increased work on the deposit, that the deposit gets A, higher grade, and B, larger. Real 10-bagger, but with risk.
Okay. I don't think there is a 10-bagger without it. So got to pick your poison. Pick your poison.
People who care about Meteoric might be well to go in the Real classroom and watch an interview that I did with Dave Wargo from FCP Resources. Dave, despite being an extraordinarily good salesman and an investment banker, began his career as a metallurgist. He's got a lot to say. And he was part of the success of Neo Materials which was the first of the non-Chinese rare earths companies that I was involved in. And in fact, a company that really assisted the Chinese in building their own rare earths processing business 20 or 25 years ago. Dave is a true expert in rare earths. And in that interview, which is hosted at the Reveale Classroom, there's an extensive discussion of both rare earths generally and meteoric in particular.
Okay, check it out. It's all in the classroom. Stephen wants to know. I haven't heard of this one. Sable Offshore Corporation. Have you heard of them?
I have. I don't know enough about Sable to comment, however.
Okay, all right. Gene is asking about sovereign metals. Is this the year for the stock? They should release the feasibility study this year, then possibly a takeout by Rio Tinto.
Yeah, Sovereign is another one that I'm really attracted to. I'm attracted to it because, again, it's a world-class, world-scale, tier one deposit. It should be, according to the studies that I have seen, uh, in the lowest cost quartile in two materials, graphite and rutile, and in the highest return on capital employed. It is in a tough country, Malawi. Tough because it's extremely poor, tough because the infrastructure is lousy, and tough because there's not much mining activity in Malawi. There isn't a lot of infrastructure and there isn't a lot of governmental code or expertise around mining. And those are real challenges. Um, the quality of the deposit is such that I think the challenges are overcome. The challenge that investors have is different, which is to say that Rio Tinto is a substantial shareholder. And my suspicion is that although I think this company could be a 10 bagger in the 5 year time frame, I think it's likely that in 2025 or 2026 that the company is taken over by Rio Tinto, which makes it a 30 or 35% gainer as opposed to 1,000% gainer. Frankly, it reminds me of the old Purelator oil filter commercials. I don't know if anybody watching this is as old as I am, but there was a mechanic that would hold up a little oil filter, and he said, "This is like $6," and pointed to a blown engine, the consequence of no oil filter, and said, "You could pay me now, or you could pay me later." That's the way I regard Sovereign. If Rio Tinto takes it over in the 12 to 18 month time frame, you get a nice lift from the current price. If they don't, assuming that the feasibility study comes as I think it will, over 5 years or perhaps a little while longer, this could easily be a 10 bagger.
Okay. And JN is asking, only time for a few more questions. Erdene, what does Rick think about Mongolia?
I like Mongolia. Erdene thus far has been too small to attract me. I've been watching it for years. I've tried to talk myself into buying it because I think the upside, the exploration upside, is spectacular. These guys are early movers in Mongolia. They don't try to run a Mongolian asset from Toronto or London. They run a Mongolian asset from Ulaanbaatar. I like everything about it except the data. Thus far, while I like the grades, I don't like the tons.
Okay. And Tien is your Briex story. We went over Briex in a past interview, Tien. So check the archives on that one. It was probably one of the best stories I've ever heard Rick tell. She's asking about how would you value the water rights in the company Hot Chili?
I think you need to see a feasibility study. The narrative's fantastic. There's no water there. The Chilean government has given them the ability to manufacture, or at least has given them permission to manufacture water from the Pacific Ocean. All that's wonderful. The Pacific Ocean's a pretty big resource, functionally limitless. Now let's see them make it economic. What are the upfront capital costs? What are the process costs? What are the energy costs? I love the narrative. I want to see the numbers. Christian, who runs that company, is a superb promoter. He really, truly is a superb promoter. He's good enough. I only take his phone calls once a quarter, and so I want to see the end of narrative, and I want to see the beginning of a feasibility study. I do know that Dr. Nicole Adshed Bell, a friend of mine and somebody who I have a lot of respect for, is a director. In fact, I believe she's the chairman of Hot Chile, and I know that she has approached an old friend of mine, Catherine Raw, who I served on the board at Sprott with, who was director of new business development at BHP. And the idea that the management team of Hot Chili is attracted enough to the potential economic value of the water resource that they're trying to sell it to BHP, or at least get BHP as a joint venture partner, tells me that they have a lot of faith in the project. I mean, to have the guts to try to bring in BHP means that you have a lot of faith in the economics of the deposit. I haven't seen enough data to give me that same faith.
Okay, let's do the last question here is from Philippe. Did you get a chance to study the Liberty Gold pre-feasibility study?
I did. And I need to say, I'm concerned. I'm concerned by some of the inputs to the study. I'm concerned too about the unpatented ground and the need to permit that federally. I'm less concerned about that need under a Trump administration than I would have been under a Biden administration. But I note too that there's substantial local opposition in both Montana and Idaho to open pit mining, particularly where the recovery technique is cyanic leaching. I don't own Liberty, despite the fact that I'm a longtime admirer of Cal Everett, who at least occasionally runs that company.
Okay. Alrighty, we're tapping on the hour here, Rick. Do you have any closing thoughts? Anything you want to leave our viewers with?
Yeah, I mean, if you're here because you're interested in natural resources and precious metals investing. Show up Saturday. The financial risk is all mine. If you don't think that the intellectual capital that you gain as a consequence of spending 8 hours and $99 is worth your while, email me. I'll give you the money back. Full money back guarantee. All the financial risk is mine. There's no speculation that we talked about today that's riskless. This is the only one. So do your personal balance sheet a favor. Click the link below. Show up, and I'll see you Saturday.
Awesome. And it will be recorded so you can watch it as many times as you want because you will need to. You will need to. Awesome. Well, thank you very much, Rick. Always a pleasure. A lot of fun. You have a great rest of the day, sir. And thank you to everyone that showed up in the chat and for the questions. Love doing this. Love you guys. Thank you.
Thank you.
Bye bye.